All right, we are live for the Wednesday edition of the People's Talk Show. And man, I run a little behind because I have more articles than I'm actually going to be able to get to, just because it's just so much stuff happening. And today I want to focus primarily on Uncle Sam, that character with the American flag hat on that always has his hand pointing out. But as of right now, he's like this, like basically gasping for air because he's coming down a home stretch in reference to just the liquidity crunch, the government bond sell off, just the debt binge, not doing well right now. So I got a lot of graphs to just show a very dark and doomy outlook for the U.S. economy as well as the world, unless it's all dependent upon one thing, more likely, that has to do with quantitative easing, stimulus, whatever you want to give it a name for. That's if none of that stuff comes, yeah, I'm not quite sure how our government plans on getting themselves out of this mess that they've created. But we're going to get into that, and a couple other subjects as well. So before I move forward, let me know where you're watching from. Any first-time viewers, definitely let me know where you're watching from in the chat. And then make sure you guys throw up a thumb, one of them thumb signs. Show your boy some love. Give it a thumbs up so more people can find out what's going on here. And also just, do a little different little graphic today. Switch it up a little bit. Go a little lighter behind me. So it brings out my skin tone. Just playing. But anyway, let's get right into it, man. I don't want to be long. And I noticed that I have more articles I'm going to be able to get to. So I'm going to do my best to try to just rant, just, given a bare minimum of the headlines. I had a chance to read through some of them, but most of them, the headlines speak for themselves. They just all tell a very unfortunate truth as to where our monetary system is heading. This government's in trouble, central banks in trouble, you name it. So as you guys can see right here, I made a little graphic as well where I got Uncle Sam laying on the table, fiat currency on him, aka dollars. And if you look, he got the IVs going into his body. And what's in the IVs? Stimulus, more currency. Either you load them up or he gonna flatline. That's kind of where we're at right now, in a sense. And so the question I'm gonna put there to you guys, is this kind of like the last, gasp of air for the economy, or can they pull another hat out their rear ends and bring things back to where they want it to be? So, we'll get into that. But anyway, welcome everybody. Hope everyone's doing well. As I mentioned, hit that thumbs up button, show your support for the channel. And as always, the goal is try to give it a little time before I get into the headlines so more people can plug in. Just because, hopefully everybody who's watching right now or who's watching the replay, make sure you hit that bell notification so you're notified when we go live so you can join in real time. And more importantly, get the updates in real time, or join the chat where you can let your voice be heard or be able to call in. So, all right, I'm already okay. So let me just keep moving, man. I don't want to be too long, but definitely if you got thoughts, ideas, suggestions, call in, make it quick, short, to the point, and let your voice be heard, because once again, this talk show is for you guys to talk. You know what I'm saying? Like, I can talk all day long, but I want to hear from some of you guys. So, all right, let's keep it moving. All right, let's keep it moving. All right, so before I move forward, got to always give a shout out to my people at Four Patriots for being a blessing. And there's a lot of buzz and excitement happening right now in reference to their solar generator that's going on right now. So as you guys can see here on the screen, something new to their lineup. And it comes with a solar panel, things of that nature. On top of that, they got the food, they got the energy, they got all the things you need for preparedness sake. And this particular page here, forpatriots.com/RTD, is their specials page where they have things there at a little bit of a cheaper rate compared to their initial site. So I encourage you guys, if you have not, go check it out, show your boy some love, or share it with a friend so they can grab some things, just because you can never have more than enough items for emergency sake. God forbid nothing happens, but it's better to have something than not. So definitely check that out. The link is in the description. Show your boy some love. I'd definitely be appreciative. All right. So I want to jump into a breaking story. So this wasn't part of the plan, but I just saw that something broke in reference to this strike in the Motor City area. And of course, as I say, where Motor City goes, that's where the rest of the world goes. And so we got the UAW reaches a tentative deal with Ford, signaling in to a weeks-long strike. So this is as of an hour ago. So here you got Sean Fair, their union president, up there, put his hands up, as in a victory. And of course, it's an older picture because we got Jesse Jackson right there as well. So, but anyway, real quick, I'll thumb through this. It says UAW and Union and Ford have agreed in principle to the terms of a tentative agreement. It says with which might signal the beginning of the end of the strikes against Detroit's big three automakers. It says a tentative agreement could be announced as early as Wednesday night, pending UAW leaders. It says the agreement will need to be ratified by UAW members, thousands of whom have walked off the job at Ford factories throughout the U.S. It says the automaker and the union participated in intense battles Tuesday and Wednesday in an attempt to finalize a record deal. Okay, so let's get to some nuts and bolts. It says around 13,000 UAW members went on strike. Okay, the talks will let me get to some deals. It says the talks this week involved a proposal for wage increases of at least 25% over the term of the deal, as well as other improved benefits previously outlined by the union and the company. So because it's relatively early, no key details, but it looks like the fact they're talking about increasing of at least 25% over the term of the deal, I guess that's enough for them to consider possibly going back to work. So could be a good thing. You know, it's better to be working than be on strike, because when you're on strike, you ain't getting paid, and them bills don't stop for nothing. Anyway, so that's what's happening to UAW. Curious to hear your thoughts on that. All right, keep it moving. So I got a lot of visual aids, man, just things that really show you how okay, you know, so I don't want to use the word bad. I want to be realistic, but I want to say not pleasant right now. And so just the graphs I'm showing you I got some from Twitter. I got some from like Kyle Bass. I got some from a lot of people who are deep and technical in this field. And so what I do is I just extrapolate the main points and just deliver it. Because if you look at everything from the macro long viewpoint, you get the same thing as if you're talking to a certified master PhD economist. But then again, he probably has a career to support, so he's going to tell you what you want to hear rather than shooting it to you straight. So anyway, bonds have plummeted. So this has to do with a particular debt product that's associated with the bond market. So here we have iShares 20+ year Treasury bond ETF. And I'll give you a little synopsis of what this says. It says, this is the sharpest drawdown Treasury bonds have ever experienced. 20-year Treasury bond ETF, TLT, was at $170 in August of 2020. Move myself over here. In August of 2020. And today, TLT is hovering around $83, a level unseen since May 2006, prior to the financial crisis. And so that's when I get into the whole idea of this. Is this like coming on the last gasp of air for the economy as a whole? Because wherever the debt market goes, everything else follows. So it's the debt market, the credit market, then last, the currency. It says here, to put this into perspective, TLT has experienced a drawdown of more than 51% since the highs in August of 2020. So once again, is this, some scary doom and gloom, or is this like stats don't lie? You guys let me know. All right, keep it moving. Move myself back over here. I want to get through these as fast as I can, giving you headlines, stats, and facts that you do what you got to do with it. Okay, here's another interesting story. This is from a CEO of a too big to fail bank. It says, world at a tipping point following government debt binges, says HSBC boss. So here you got boss man signaling a little warning, basically saying that, hey, things are getting a little tight on their end, especially because they're underwater by holding all that debt that we're talking about that's selling off right now. So real quick here, it says, Noel Quinn, chief executive of the bank, which is one of the world's biggest, said countries risked being hit hard after allowing borrowing to balloon in the wake of the financial crisis and pandemic. So he's basically saying that after the great financial crisis, drop rates, debt surge, the pandemic hit, rates fell, went on a debt binge, and here we are now, time to pay the piper, in a sense. It says, speaking at their future investment initiative in Saudi Arabia, known as the Davos in the Desert, Mr. Quinn said the current rate of borrowing was unsustainable. Where else have we heard the words unsustainable? Didn't we have Jerome Powell just last week come out saying that the current national debt levels is unsustainable? So that's another word to keep an eye on. So I'm not going to bore you with this, but, big boss CEO making probably, 15, 20 million a year, expressing his concern after he's reaped the benefits of this abundant harvest that they've been able to get out of the debt system. Anyway, man, never stops, never stops. Here's another one. Treasury yield. It said, let me move myself out the way. It says 10-year Treasury yield jumps above 5% for the first time since the 2008 financial crises. So the article before, go back to the graph, show that we haven't seen a sell-off of that magnitude since 2006, which was before the great sell-off, for the great crisis. And then here we have first time since the 2008 financial crisis. So the crisis hit, bonds spiked, and here we are now as the market routes drag on. So that kind of speaks for itself. As you guys can see here, everybody's watching these very closely. And of course, oil is something to keep your eye on. And today wasn't good for a lot of the, I'm going to get to that too. So real quick, it said bond prices have cratered in recent weeks in one of the worst market routes of all time. So is this headline trying to insert fear into the economy, or is it hard to hide to where they have to somewhat be truthful? You guys let me know. Okay, let's keep it moving. Keeping it moving, people. I got a lot of articles to get to. Okay, world's oldest central bank seeking $7 billion bailout after massive bond losses. So central banks are taking losses because the Federal Reserve in particular is holding on to a lot of basically this junk debt for the most part. Yeah, a lot of junk debt. Real quick. So it starts off talking about the Federal Reserve and their losses. And at the end of the day, a central bank, because they create the currency or they're associated with the interest rates that go into the credit expansion overall, they can get away with it for a while. But if this was a company or a person, man, they would have to file for bankruptcy quickly. Or there's going to be a lot of losses taken on by somebody, and you better believe it won't be them. But real quick here, it says 2 weeks ago, we reminded the world that thanks to soaring interest rates, which will only keep rising until the Federal Reserve figures out what's big enough crises to use to trigger QE. It says the staggering losses in the global fixed economy securities. So the global fixed economy securities, which according to the IIF amounted to 307 trillion as calculated by, you'll get into that. And so it has risen. As a result of the bond rates going up, the amount of losses taken on has equated to $107 trillion. It says, while the thanks to such as facilities as the BTFP, which is the Federal Reserve emergency, whatever, it says much of the mark-to-market risk has been transferred to the bank. So literally, because all the banks were in trouble, the Fed took it onto their balance sheet. And as of right now, we're looking at major losses. So another graph showing losses, but it's a central bank. So they can get away with it for a while. But it goes on talk about more losses. It says, while the cumulative mark-to-market loss on its multi-trillion-dollar bond and mortgage-backed portfolio is now a staggering, hold on to your hats, $1 trillion. This despite unwinding more than $1 trillion in assets on its balance sheet since the early peak of 2020. So despite the fact they're unwinding, letting things roll off their balance sheet, there's still an additional $1 trillion. This shows on their portfolio of stuff they just brought on, and it happens to be the bonds and the mortgage-backed securities. So all the things they sold to the world back when interest rates were low are now coming to a halt because interest rates are back up. So $1 trillion. And then it goes on to talk about the Sweden's Riksbank, which is the bank it's referring to. It says in a press conference, Riksbank's governor before the Swedish Parliament Committee on Finance Tuesday he said that the now insolvent central bank needs a capital injection of 80 billion kronas, or just over 7 billion, representing a little over 1% of the Sweden's GDP. So basically, you got a central banker coming out saying that they need to be stimulated. So, yeah, this is you can't make this stuff up. Forgive me for ranting so much, but I'm gonna get to the nuts and bolts. Okay, so this is this article that piggybacks on that one, talking about the world now facing up to 70 trillion in global losses. So it's from the article that the guy I was talking about. So just showing how more losses are piling up. Okay, next one here. The last time U.S. yields rose so much, it sank the economy twice. This is Uncle Sam here. We're talking about this is Uncle Sam here. This is Uncle Sam. These are derivatives of Uncle Sam, aka the government and the type of problems that's being caused. And so it just shows a graph here, but it shows, the 10-year going up a little bit. Then it goes into more detail. I'll spare you on that, but just showing more danger. Okay, next one. So it's just not here in the U.S. Of course, China's going through their issues. And so this is an interesting story. It says China's strategic fiscal pivot issuing additional bonds to bolster their economy. So they're in the same boat as the U.S. They're in need of liquidity in their economy to get things rolling again because they're on life support as well. And so they're going to issue large amounts of bonds. The same thing our government is going to do here within the next year plus to try to make up for the $1.7 trillion deficit and counting. So just to let you know, the U.S. ain't the only one. Okay, more graphs. Okay, here's an interesting graph talking about just, on Main Street, aka Wall Street. This is Google, Alphabet. And so this article came out today at 3:30 p.m. I don't know what the closing figures were, but it says breaking: Google stock is now down by 10%, posting its worst day since 2020. 2020. So Google, this is one of the big seven that's propping up the world for the most part. Nearly $200 billion in market cap has been erased today alone. The seven largest tech stocks in S&P 500 have lost more than a combined $500 billion today. Today, $500 billion lost today. It didn't just disappear. It was transferred into the hands who was shorting, who probably lucked up, and a lot of people pockets got fat today. Anyway, you see this graph here. It's not pretty, but this is a publicly traded company that a lot of people have been encouraged to get into. Okay, keep it moving. All right, let me know. Let me just check in the chat real quick, make sure I got my people still there. Oh, yeah, Japan. Yeah, the yen USD exchange hit 150 twice. So then again, they're the largest holder, second largest holder of U.S. debt. So they're going to be unloading more debt if they want to support that currency. So you got people selling the bonds at the same time, people trying to issue it. Spells a mess. Okay, next one. Just another visual aid. I'm not going to bore you anymore. It says the M2. Let me just make this a little wider. M2 fell negative 3.6% last month. And so just to give you an idea what's going on here, interesting graph. It says the M2 US dollar money supply just lodged its 10th straight month of contraction. It says the longest period of money supply contraction since 1933 just keeps getting longer. So, right. So like to go back to that initial image that I created where you have Uncle Sam sitting on the table, he's in need of injection. He's in need of a continuous currency creation in many facets to keep this thing running, as well as consumer confidence and everything else. And right now, it's not looking too pretty. Not looking too pretty in that field. Okay, keep it moving. Let me get to my next article. Man, I got more than I'm gonna get to today, but I'm gonna do the best I can. Okay, so here's just a headline that highlighted what I was talking about. This is from Kyle Bass. So I'll zoom in so it's a little easier to read. It says China is experiencing a USD funding crisis similar to the rest of the emerging world. Xi was forced to visit the PBOC and SAE safe for the first time ever yesterday. China's banking system is in free fall, and Xi has been forced to sell U.S. Treasury bonds and U.S. stocks to stem the decline in the Chinese USD balances globally and to defend the Chinese renminbi. So, according to Kyle Bass, who basically has made China his primary field of study, so he's telling us that the Chinese economy is, on the brinks as well. Okay. What else we got here? I may not want to bore you. Okay, so just a little on the political side. I don't follow much, but I thought this was worth bringing because it gives a good summary as to Michael Johnson, the new Speaker of the House, who I know nothing about really. But here's somebody, Benny Johnson, who gives his opinion on what he can bring to the table. Let me get myself out of here. I got too many windows open. So I'll just read this real quick. As you guys can see, it says, we have a speaker who's Representative Mike Johnson of Louisiana. He's an America First, a.k.a. MAGA, ally of the House Freedom Caucus. His mentor is Jim Jordan. He served as legal defense for Trump during both indictments, voted against the Ukraine spending after initial bill. He has an F rating for the Republicans for Ukraine, objected to the certifying 2020 election fraud, called to arrest Pelosi after he tore up the State of the Union. So this guy here is a new Speaker House. Will it matter? I don't know. I know he's probably going to just muck things up, keep things from moving forward in a positive and in a negative sense because our economy can't afford it right now. So keep it moving. Okay, let me know your thoughts on that. And then what else? Here's another one. Let you know that crime does pay when you got the right connects. FBI received criminal information from over 40 confidential sources on Joe Biden, Hunter, and James. But then again, they can't do nothing about them just because they're part of the family. They're part of the family. But just crime at its best, where it just gets swept under the rug because there's much more pressing issues that the globalists, aka the banksters, aka the Satanists, are trying to accomplish. So, okay, enough of that. Whew, got that off my chest. I got more articles, a couple more, but I'm not going to bore you guys. So let's get the phone lines open, man. Let's talk. As you guys can see, there is a number on the screen. If you guys want to share a thought, a comment, or bring something new to the table, have at it. This is your time to speak. We'll see where it takes us. Won't be long, so make it short, quick, and to the point, and we'll do the best we can do. Or highlight a thought or something like that in the chat, and I'll try to jump on it. Okay. Let me see here. Let me see. Okay, we got some calls, so let's get them in real quick. Let's get them in. Let's get them in. Let me get you in real quick. Give me a second. I got you on here. I got too much stuff going on here. I had a couple people calling in. Forgive me. Call me back, man. Call me back. If I exit out of one, it takes away everybody. So, bam. I got you on here. All right. Hello, caller. What's your name? Where you calling from? Give me something.
Hey, Mike, this is Jimmy from Baltimore. How you doing?
Jimmy, doing good, my friend. Give me some quick thoughts if you don't mind. What's on your mind?
I wrote it down. So check this out. I think that this will go on a lot longer than anyone expects.
Mm-hmm.
And that's what's for the wealth transfer. I also think that a lot of people have gotten a lot smarter and are going to start trying to beat them at their own game, meaning investing into stocks, real estate, precious metals, and maybe even crypto, which all seem to keep up with inflation. I also think that we're going to see more group economic activities. I believe that all this will cause a great wealth transfer. And the truth is, they know this, and when the people start to realize this on a larger scale, this will be the end of the so-called elite. They are truly terrified. However, they have great poker faces. The facts are that there has always been so-called elites that have been trying to control the world and play, but in the end, it doesn't work. Just the last thing. The news people read, the articles that are written are all designed to serve their agenda, not ours.
Right.
The thing to do is to write your vision down, make it clear, and go for it.
Hey, man, I hear you, man. Appreciate you. And as far as like the elite, this being their last hoorah type of thing, I would love for that to be the case. But then just because I know who's the ultimate force behind the people that's controlling this or trying to control this, it's a much powerful spiritual force, aka fallen cherub angel that is overseeing his kingdom. So he's gonna always have puppets that he uses to accomplish his agenda in the interim. You know what I'm saying? So it's like, okay, the fact that they now all gonna disappear, it might be a shakeup, but there's still gonna be evil in the world. So there's gonna be evil people doing that evil. So yeah, whatever that's worth. But then again, I'm hopeful and optimistic that there will be some great opportunities out of this as well. So I'm not like completely like, oh, there's nothing you can do about it. Run and put your head in the ground and don't come up. But you get what I'm saying? Like there's still gonna be evil people that oversee some things just because that's what this realm is about at this current moment. But I got you, man. Let me get some more calls in. I appreciate you. Yeah, be good. Good morning. Hello, caller. Where you calling from? I lost you. All right, give me a call. I missed a couple calls there. So I want to hear from you guys. So I'm gonna try not to respond directly. Just share my opinion. Okay, I'm could be 100% wrong. Just as I'm hearing thoughts presented to me, the goal is to share my first thought based upon what might make sense, might not. Who knows? Give me 1 second. Let me get you. I got you. I ain't gonna forget you. I got you on here. Give me 1 second. All right. Hello, caller. What's your name? Where you calling from?
Hey, what's up, Mike? It's Joe from PA.
Joe from PA. What's going on, man? Give me something quick if you don't mind.
All right. What's your view on like painting market as far as like certain apps like Masterworks selling paintings, some like held by the Vatican? And the second question is, what do you think about the Forex market? Do you think the Hong Kong dollar is a better trade than the Japanese yen, and I'll let you get back to your show.
All right, appreciate you.
All right, thanks.
Great questions there. Great questions there. Let me get to that real quick. I got a call here, but in reference to the art market, there definitely is value there because there's unique pieces that are rare, and they have all the principles and qualities of scarcity, and so it definitely will hold its value in times moving forward. But then again, unloading it, how much, what currency type, will you be able to actually travel with a big piece of art? So it's going to have to be in a vault somewhere. So it's not as portable and movable as other assets. But then again, if you are a higher net worth individual or you have unique pieces that you create, sure, there might be value for it beyond that. And as far as the FX markets and when it comes to trading, trading one garbage for the next garbage, the goal is to get in, get out. Of course, I don't do the trade aspect. So in the short term, there's opportunity there if you're a skilled individual and know how to get in, get out. Sure, it's a gamble, it's a risk. But then again, if you know what you're doing, go get it. Me personally, as all this unwinds, I don't really want to be holding anything that the government has already weaponized, and they're going to weaponize even more because they need to keep this system running. So as far as that Hong Kong trade with the yen, I don't follow it like that. So I'll be the wrong person to ask. But then again, it's a gamble. But if you're good at what you do, rock on, player. All right, let's get some more calls. Hello, caller. What's your name? Where you calling from?
Mike, Tony from Oakland. How
TB,
you
doing good, my friend. Give me something.
On the Johnson thing.
Mm-hmm.
Speaker of the House.
Yeah.
Ukraine funding, and he's a Trumpster by heart.
Yeah.
I'm curious to know what they say with the Congress and the Senate.
Mm-hmm.
You know where they stand by where they sit.
Right.
So now that he's sitting in the head chair, is he going to reverse all his thinking now to go back to the way that things were before McCarthy left?
Yeah.
And that would be my thing. And I watched his speech, and his speech was, "We're going to fund Israel, and we're going to get back right now and go vote on that bill." But out of that $106 billion that's coming out of our pockets,
mm-hmm.
Israel's only getting $16 billion of it.
Where's the rest going?
$2 billion is going to Ukraine.
Right. Oh my goodness.
Doing here? What are we really passing? What's in that bill? And right. The other thing I want to, and I probably should let you expound on it and mm-hmm. then get off the line so someone else can get in. Mm-hmm. Do you think that the bond sell-off is due to the lack of dollars?
Yes, I think initially it started as that for sure because of the liquidity squeeze. As that article mentioned from Kyle Bass mentioned that the world's suffering from a dollar shortage. So it started off as needing liquidity. Sure, we got to sell something to get something so we can take care of bills, pay our debt, yada, yada, yada. But then it's escalated now as all the banks have raised rates to where they're all in a pinch to where now the goal is like, okay, the Federal Reserve, which is a reserve currency, they're just going to issue $2 trillion in a couple of months and the rates are going to continue to go higher. Let me get out right now and stop taking, so I'm taking even more losses on what I'm holding. So now it's like a scramble to get out from not completely being completely drowning. Like you're underwater, but if they keep raising, the price value gonna go down, down, down even more. So it's like it might be a scramble to get out now, so you can get more of your value back as much as you can. So that might be a little bit of a panic on my part.
If I'm thinking it wrong,
mm-hmm.
selling their dollars or selling their bonds
mm-hmm.
to get dollars, correct?
Mm-hmm. Correct.
They're selling their bonds to get dollars.
So not. I mean, not. Mm-hmm. Yeah. No, go ahead. I got you. I'm sorry.
Is at 106 going up is high. You just sold a bond that was almost worthless compared to now.
Mm-hmm. But you still got bills to pay. Or watch this. Or you're not in a rush to go out and buy bonds because all the other stuff happening. You might be looking to buy other things. You know what I'm saying? Like, so that the gold narrative again, or put it into somewhere else and all that stuff like that. So ain't no telling, but clearly with the prices going up, huh?
Then the gold price could go up.
Should go. But then again, we got a disconnection between the East and the West. Look at the premiums on what's happening out of Chinese Shanghai exchange and the COMEX here. it's starting to widen. It collapses some, but it's starting to widen. But hey, I got to get some more calls in though. So go ahead.
But the premium is not what the price is. It's what
the spot price.
Said,
I'm talking about the spot price in East is different from the West. There's a slight difference because of how they're coming up with that number. So that's just, we'll see. But hey, appreciate you, man. Appreciate you.
They're buying the bonds and the new bonds because they can't get dollars, and they're selling the old ones because they're continuing to lose value.
Hey, we're gonna find out. Do some investigative work and get back with me. I can use that help. Appreciate you. Hello, caller. What's your name? Where you calling from? Going once, going twice. Anybody there?
Hello. Hey, Mike.
Hey
Hello?
there.
Hey, Mike. It's Aaron from Delaware. How
Aaron from Delaware. I'm doing good, my friend. Give me a quick thought. What's on your mind?
All right. Well, my quick thought, and I was thinking about it. I feel like the topic for the day is recency bias, right?
Okay.
Now, if you look at a chart of the stock market, especially the NASDAQ, like the tech sector, it got hit really hard today. While interest rates are going up, the tech sector, as we know, is very interest rate sensitive. But
Uh-oh. You there?
you bad? Hello?
I'm sorry. Yeah, you broke up for a second. Start that last little sentence over.
I was saying that basically all the major stock market charts are looking pretty terrible right now, especially when you look at what a dead cat bounce is. And all the markets pretty much look like they're having a gigantic dead cat bounce right now.
Right.
So, I mean, for the last 30, 40 years, we've had this easy money, cheap credit, and stock market just go up and up and up, and bonds go up and up and up. But what if now we're entering a long-term cycle where the stock market's turning downward? People that have the 401ks and everything, that they're looking at their $1 million today, it might be $500,000 in a couple of years, and inflation might be 20%. And what's that purchasing power at that point? You know what I mean?
Right. And so
that's what I wanted to put out there.
Yeah, I appreciate you. And of course, that line of thinking there goes along with a lot of other people who really dive deep into this, like Lynette Zhang and Peter Schiff's, and they all had that same thesis that no matter what, either you issue more currency to inflate the problems away, or you do what they're doing now and just contract the monetary supply and still cause problems. So it's problems if you do, problems if you don't. And at the end of the day, the fiat currency, aka the Federal Reserve note, is the last line of defense for people, and it's the last line of a weaponry for our government. So it ain't pretty no matter what. Appreciate you, my friend.
Right. Yeah.
100%. As you see right here, get your weight up. All right, my friend. Appreciate you.
Take care. Thanks.
Yeah. It's guaranteed. Okay. Anyway, that's all she wrote, people. I got enough calls in. So the goal is to rant as much as I can, hear from you guys, get your perspective. And of course, if you disagree or just got a different viewpoint, feel free to call in and educate me. I don't have to be right. Don't want to be right. I want to learn. So I want to learn from you guys. So as well. All right, my people. It was a good live stream, to say the least. I got my rants out, gave you all the graphs you need to realize that Uncle Sam is literally gasping for air. Now, do the central bankers let him collapse, let him flatline, or will they come in and save the day? But that's why the war drums are beating. That could be the last lifeline to inject something into Uncle Sam's veins to keep that heart beating. So anyway, hope you guys enjoyed this. If you have, hit that thumbs up. If you don't mind, take this video once we're done, put it out there on social media, Facebook, Twitter, wherever you at, so more people can find out what's going on. Come over and get a alternative perspective on what's really happening. And then we'll keep it going. Daily Bible, appreciate you. Says, I am encouraged that the war with Russia talk has diminished, but Rafi Farber, a Jew himself, called the Israeli people God's eternal people. The war in Israel may be the straw that breaks the U.S. back. Well, definitely, biblically speaking, the Jews, the Israelis, the Hebrew people are of the Bible, no doubt. Now, I get a lot of questions as to whether or not, like, the people who currently reside in that region, if they're really God's people in that context. I don't know. I don't care about all that. I just know who I am in Christ right now. So I'll live and ride and die with that one. But as far as this war in Israel, maybe the last straw that breaks the U.S. back, I think it's intentional. So I still think that we're not in the biblical time frame of everything unfolding as we get towards the end of this. But then again, nothing is by accident. Everything is strategically done on their part. And I think with all this debt coming due, they need an excuse. And what better excuse other than to go to war? So they want to go back in Iraq. They want to go back into Syria. And they've never been in Iran. So Iran is a primary goal of the military-industrial complex. So you better believe a false flag is around the corner or some type of staged event. So anyway, that's just my 2 cents. But Daily Bible, appreciate you, my friend. All right, people. I ain't going to rant no more. I promise you I'm done. Enjoy your night, and I'll see you guys tomorrow. I'm going to try. So there's 3 days ago. I'm going to try to do 4. Pray for me. Be good. Visit Rethinking the Dollar throughout the day. Your place for news on metals, gold, crypto, you name it. Scroll down to the bottom and you get a chance to see the daily videos, the recommended videos, and more importantly, the 5 reasons to unplug from the monetary matrix, with the first one being the awakening period. Step number 1, test your dollar IQ. 10 simple questions, average is 60%. Follow up with the alternative perspective with the monetary reports. Consider becoming a supporter of the Rethinking the Dollar platform via Patreon. Get a chance to hang out off air as well as additional information that can't be discussed on YouTube. Any support is helpful. With the crackdown on alternative media, the best thing to do is connect off air. Scroll down to the very bottom. You can find Rethinking the Dollar on Telegram, audio, Facebook, Twitter, Parler, you name it. The most important ones will be the email list where you can get notified weekly, the Discord page, and make sure you connect on Telegram. And last, don't forget to visit the RTD store where you can get merchandise as well as additional information and resources. And most importantly, scroll down to the bottom and get your weight up with all the limited edition rounds only